So we're going to look at the entry point. The entry point is going to be at 44,122, targeting up at the highs at 44,314, with a stop loss nicely tucked in behind the scenes there at 44,059. That's going to yield a 1 to 3, probably realistically net a 1 to 2.7, I would say, on average. Good to see you all, and welcome one and all on the YouTube side of things as well. This will be a public and free live US CPI trading event this afternoon, so I hope everybody out there is doing exceptionally well. It's currently 31 degrees outside here in London, and in the office it's got to be double that. I swear to God, it's a sauna in here. But we are going to push on regardless, as we're all incredibly excited for this afternoon's US CPI trading event. So, first of all, hope you're all doing incredibly well. Good afternoon to you there. Hello there. Hey, you guys. Good to see you. So this afternoon's US CPI team is an incredibly important one, as I've alluded to in the description for this event and in the introduction to the event itself as well. It's incredibly important because, of course, we have the Fed deciding on whether or not they are going to be cutting their interest rates coming up in September. A lot of money is being priced into the markets regarding this, but today is the day. It's really going to paint the picture. Obviously leading the Fed into that decision if they are going to either tighten or loosen off on the monetary policy front. This is obviously going to have a huge impact, in our US stock markets and of course the DXY, the US dollar currency as well. It will have a broad impact across almost every single asset class in the world. So it's a huge one. It's a really huge one. Most of the CPI events are big, but this one in particular is really big. This one is definitely going to be painting the picture as to what we are going to be expecting in the September rate cut itself, which honestly is not even that far away anymore. It's incredible that we're talking about September already, as we are today on the 12th of August. So looking at the data itself in detail then, we've got core and base inflation rates today. We've got the month-over-month data looking at a 0.1% uptick, a prior figure of 0.2, and the forecast is 0.3, 0.1% uptick there. The core inflation annual rate, which is one of the more important ones, is also looking at a 0.1% increase. Just going in the trend that CPI is not going anywhere. The inflation is not going anywhere, regardless of the Fed keeping their rates longer than expected. And then, of course, we have the base inflation down here at a 0.1% decline. That could just be the outlier there. That's absolutely fine. And a relatively unimportant metric in comparison to the annual base inflation rate just below it, which is also showing a 0.1% increase. So we're looking very, very bullish data across the board in terms of currency strength. You know, I did outline my thoughts for those of you who are not paying members. For those of you watching this on YouTube, I outline thoughts quite often on the fundamental theme, the macro theme. And I was just saying yesterday, with the dollar in the sort of situation it's in at the moment, geopolitically speaking as well, it's not a clear-cut path to say that if the CPI is strong, the currency is going to be strong in this particular release, on this particular release. It's not as clear-cut as that, and we may actually see some pretty, I would say, sort of volatility, whipsawing style volatility there from the DXY as a result of the data today. Or I could be completely wrong. We could get that very natural historic rally as a result of this CPI data. We may indeed see that, but there's so many different elements at play at the moment, and I again explained this yesterday in the session leading into today's CPI event, that because of all these elements in play at this time, it's just not clear cut. So we're going to have to watch that DXY very closely. Hopefully we're going to be able to position ourselves on either side of the market today. So if it drops, we're going to be in. If it rallies, we're going to be in. Hopefully we're going to be able to capture something nice, but we'll come onto the trading opportunities obviously in the coming 15 minutes or so. So that's sort of my thoughts on the data here. We will obviously break down the individual trading assets for this afternoon in a moment, but I just want to take a moment to also look at the DXY in more detail. Now, the DXY has been struggling. It's been down trapped between these 2 points of money for quite a long time now. And we did get the initial inflection point, which came up to 102. And then we've been trading sort of between these 2 points predominantly since we broke down here. And that was on the 11th of April. So we have spent a significant portion of the year down here. Now, if I were on any other time frame, or if this was any other trading asset, I would say that to me, looking at the weekly time frame, this is an order building in the market, right? I think all of you guys out there, if you've been an avid follower of mine for at least a few months, you would be able to tell that there is money flowing, a lot of inflow into the market down and around this area, and we could potentially get ready for our next breakout, our next leg up. But then again, we could be shorting the market from here as well, right? We could be getting a lot of inflow in short orders in dollar related assets, and we could actually look at the breakdown of the dollar below that 96.27 low, and then look at the dollar trading all the way back down to 90. I don't think that's going to be the case because the demand is still there for the dollar right now, but anything is possible, right? Anything is possible, and I think today is really, again, just drawing upon what I've already said, I think it's going to paint a really big picture as to where we go throughout the remainder of the year, and if the Fed are going to be looking at that September rate cut in the same way they have been, or in fact, if we are looking at rates remaining stable. Now, of course, with rates remaining stable, that's going to put an increased level of pressure on the United States, which has already been under pressure in its current economic format, which is, and of course, I haven't even touched base on the tariffs, right? We've got the president at the moment slapping tariffs around the world. All that does is create an inflation vacuum, so we're still going to see inflation issues arise from there as well. This is just transferring wealth from the poor to the rich, from the middle class to the rich. And I'm not going to get into the political side of things there, but I think everyone's pretty much clear on why that would be beneficial when you have a White House leader such as you do. So that's what's happening there in terms of the macro theme, the geopolitical theme at the moment, in my sort of opinion, my bias. So in terms of this afternoon's trading assets then, what are we looking at today? Well, we're definitely going to be trying to get something off in gold, because gold is just naturally a really receptive trading asset to our CPI. So we're going to definitely be trying to get something off on that one. We're going to be definitely linking in a US indice. I don't know if we're going to go for a couple of them, but we're certainly going to be looking at least 1 to 2, I would say. Energy markets, not so much, to be honest. Probably steer clear of the energy markets whilst the CPI is taking off, or not in that instance. So we'll probably leave that one there. And then down in the FX space, I'm certainly going to be interested in our Euro USD. Looking at that one, see if we can get any kind of flavors on either side of the market at the moment where the price is trading. And then all the way down here to something like the USD CAD or the USD Yen. So 1, 2, 3, and 4, maybe 5 with an inclusion of an extra US indice, but that's what we're aiming for. So we'll start off at the bottom, we'll work our way through the top. We've currently got about 19 minutes to go, so plenty of time to break these assets down. So the USD Yen or the USD versus the CAD, both of them at the moment looking, I would say, relatively good. I think the USD CAD probably has a nicer bit of structure going on here at the moment. We've got those really nice highs. We've actually got a break, close, and a retest, which is always quite helpful. But we have come up, or at least are soon approaching the main inflection point up at that sort of 138 area where the liquidity is. So that's a cash-rich area in the UC. Take cash-rich with a pinch of salt at the moment. Obviously, we're trading on a 15-minute time frame. But for a 15-minute time frame, it's still representative of a cash-rich area, certainly. So I think, look, in order to get some decent confluence, we need to get the breakout of that UC's 15-minute liquidity point there. We've got an incredible void between, I would say, this area in here. That is just absolutely superb. And then all the way up, basically, guys, to the previous high there. I'm not entirely sure I'm going to put my money where I'm not sure I'm going to put my money on that and actually look for a move all the way up there. But we could certainly look at something in between these 2 points. So I think USD CAD, we get the break, close, and retest of this area, possibly looking for a move to the median of this area, I think would be quite a decent outcome. Are we going to just simply spike the way through though? Generally speaking on these kinds of events, I do like to fall back on my break of structure entry strategy rather than the break, close, and retest. And that is just to get in and out of the market on the initial volatility as quickly as humanly possible. Excuse me, drinking an ice cold can of some decent Coke. Keep the inner temperature cool. So looking at it at the moment, I mean, we could certainly look at clearing down this margin right between these 2 points in time. I just don't think that's there for me. So in order to get a decent trade-off, I actually am going to look at the trading opportunity between these 2 points. I'm going to go for a 1 to 2.88. I'm not 1 to 2.78. I'm not going to be too concerned about spread variation on this particular instrument. The reason being is because of the distance from where the asset's trading currently to where the trigger point of the trade is. In that space of time of getting up there, I'm hoping that the spread variation would have tightened back up again, unless we get some ridiculously sized spike, in which case we're going to be able to cover and offset some of that risk with a 1 to 2.78 risk reward ratio. Now, a CPI event that's been so closely monitored like this one today, you will be suffering spread variation or you guys slippage, right? You guys will be suffering it. I'm going to be suffering it as well. So, whatever the number we look at here, you're going to have to take it with a pinch of salt. Let's say, we're going to aim for a 1 to 2.88. Let's put that back there. So 1 to 2.88 on the USD CAD. I would realistically be expecting to achieve maybe a 1 to 1.9 to a 1 to 2.2. Anywhere around that sort of margin. Your entry probably ending up at around 138, 24 or something, rather than 138.20. So just bear that in mind. Now, if we are looking short today on the USD CAD, you also have a really nice opportunity there to entry. That's going to be situated there for the target profit. The entry point for this one is going to be this breaker structure underneath here, targeting down there at the lows at 137.72 with a stop loss at around that point there at 137.972 for a 1 to 2.5. Again, with slippage, you're probably looking to expect a 1 to 1.7 to a 1 to 1.9 out of that one as a best guess, I would say, based on nothing more than having done this about 20,000 times. So that's basically where we're at with the short. Now, slippage isn't an absolute given, okay? Slippage is not an absolute given. It's really at random. So it depends on execution times. Obviously, the broker's increasing the spreads at the point in time of these events taking place. There's a lot of variables, but ultimately you might get caught with a pips slippage. You might get caught with 5. Sometimes it can be really quite nasty. Sometimes it's not too bad at all. It's really at random. But that's what I would do for the USD CAD. So I'm going to take a picture of that one and I'm going to knock that one out to you guys shortly. So that one's going to be, they will be listed as blue. Right, let's move up then to the Euro USD. We currently have 14 minutes left to the event, so we're pretty good on time, but we do need to speed things up possibly a little bit. So Euro USD at the moment then, not entirely looking fantastic. Unfortunate. We're going to remove all the drawings, get a fresh pair of eyes on the charts here at the moment. So we've got a really nice structural point, ceiling of price action around there. We drag that one across to the right-hand side. That builds a really nice picture. We've actually had this area here of this point in time where the market has come down. It's bounced back. We've had a bit of a bounce off of there because of the knee-jerk reaction from liquidity being positioned at 116. So we've got money in the market there, and that's important. We know there's money in the market there. That's what we need. So what we're going to do is we're actually going to use this previously used ceiling and now currently used floor as a structural break point for a trading opportunity down below. The target profit for this next opportunity, to be hey guys, probably going to be going all the way down to that area in there. Now this, if you hadn't already noticed, is a block. So as the markets come down here, we've got the order filling station. The plane comes down, lands, fuels up at the station, boom, big takeoff. That's a really, really nice telltale sign of what's going on down there. So definitely got some money in the market around 115.40. This is quite the margin, but I do think if the dollar pings as a result of the strong CPI, this is going to be a pretty good one to have in the arsenal. So what we're going to do, have an entry point around 115.80, targeting down here at the lows at 115, let's say 115.38. And we're going to have a stop loss just above there. So that's actually a really nice healthy stop loss as well at 116. Let's say 116 on the dot. Are we going to say 116 on the dot? No, we're not going to say 116 on the dot. We're going to stick to our guns here. 115, let's say 115.977. That's going to yield a 1 to 2.87 on the short. Now for the long. I cannot see that in the next 10 minutes the Euro USD is going to be trading down here and then back up again. I just can't see that. So we're going to have to work on the proviso that it never reaches liquidity first. That doesn't fill me with a great deal of confidence, I have to say. I love liquidity being reached before trading. I want to be trading the same money as the commercial banks, so it doesn't really make a great deal of sense. But needs must, I suppose. And if we need the Euro USD in the arsenal, which we do, and we need a long, which we do, then that's going to be the only choice we have today. Now, I like this level as a floor. We've used this quite a lot of times. We've used it much more than we have these random lows here, which were, I would say, outliers, fake outs in amongst the true floor, which is where the market is rebounded most of the time. So that's going to be okay. We have come up to this level a couple of times, but against the power of the CPI event this afternoon, if the dollar does decline, it's going to be worth a spike through there to that major point at 116.35. Now, I am not on the long bias of the euro dollar. I just want to make that absolutely clear. My bias is really for the Euro USD to sell off. I've got to stick to historics, right? But it is worth having the other side of the market in there, just in case. So what we're going to do is we're going to drag this level across in here. This is going to become our new breaker structure point. It's not pretty, no doubt about it, but it is a structural breakout. And we're going to be looking at trading opportunity like this at a 1 to 2.41. Now you may see, if slippage comes into play, you might actually see a 1 to 1.1 in this trade. I'm not joking. A 1 to 2.4, that could go down to as low as a 1 to 1 or a 1 to 1.5 at a, it could do. So let's just hope it doesn't, but be prepared for a more modest gain if it does come into play. If the market comes down to this level first, I'm just saying that because it actually looks like it might. If the market comes down to this level first, we are in full flow, because then we can bring this breaker structure point, which I will copy and paste, down here to the true breaker structure point and have that trading opportunity much wider, coming from there up to that level with a stop loss sort of, I would say, around here. And that's going to look much better. That is going to look much, much better, but it might not happen. So we're going to list that one as a blue as well and work our way forwards. So next up, we're looking at gold. Let me just make sure everything's all good. Excellent. Onwards. Right. So looking at gold at the moment then, we have got a good area of consolidation. Price equilibrium is in play at the moment. We like price equilibrium because it's where the money is. So lots of money filling into the market at the moment. We are waiting for that breakout above or below price action to confirm the negative or positive imbalance of price. Do we have a decent target profit though? That is the question. Now we've got a huge void here, don't we? The open of the void, 33.02. We've got the close of the void up there at around 33.43. We've got a pretty decent amount of room to play with there. I would say that this area in here piques my interest. So if we get a break of structure, and let's say, I don't know actually, guys. I think I might even go a little bit lower than that. Yeah, I'm going to go for this one here. That's the one. Why is it the one? Because in the downward trend where we started, this is the major point of inflection before we get down to this one. Why did I not choose this one? Because this one is greedy. This one is more realistic. That's exactly why I would choose that. Okay, and we got to go at the beginning of the price action pullbacks here because we're in a downward slope, not an upward slope. So let's bring that across. That's a crazy size trading margin. Definitely doable for gold based on CPI. Now we're currently trading at 33.42. I'm going to have my breaker structure point below that low. And that is going to be there with my entry even further below that. And my entry is going to be at 33.15. My stop loss for this trading monstrosity is going to be at 33.40. No, it's not. 33.41 is where it's going to be. 33.41.5. There we go. 33.40.5. That looks insane. That's a 1 to 4. We are against the time here. I'm gonna come back to gold. I think we may end up doing gold as a market order. I've still got to punch the numbers in on these other trades as well. Right, we're really against the clock now. Right, so that's going to be the proposed short, but I don't want that going in as a pending order just yet, team, all right? So hold fire on that one. The long in gold is going to have a target profit up there, and that's going to be a real simple wave close. So we're looking at the sort of the break of structure above the high. We're looking at the target profit being at 33.80 with the stop loss and nicely below the zone. That's for a 1 to 2.91. Really, really super simple trade. But we're gonna come back to gold. We're gonna do that one, I think, as a market order. Right, let's go into our US indices this afternoon then. So currently got loads of stuff going on here at the moment. Let's delete and restart. So we've got US 30 high up there. That's really nice. We've got the structural point in there. Really simple stuff here, team. We've got main liquidity down there, right? 43.85. That's the beginning of the major inflection point. So we're halfway between the two spaces at the moment. So we don't need any kind of, major break close retest. We don't have any major risks at play here because all we're doing is looking at taking a smaller portion of the pie between these 2 points than the major portion of the pie, which is these 2 points, right? So that's why it's really good to do do stuff like this and find a decent margin, within the greater margin. So we're going to look at the entry point. The entry point is going to be at 44.122, targeting up at the highs at 44.314, with a stop loss nicely tucked in behind the scenes there at 44.059. That's going to yield a 1 to 3, probably realistically net a 1 to 2.7, I would say, on average. Now, if we want to take a short in the Dow Jones, we are going to look at a break underneath these lows. We are unfortunately only going to be looking at the low there for the target profit. That is not great because we are trading on the lower half of this trading margin. This is pretty weak. So yeah, it's unfortunate. At this time, I don't really want to go anywhere below that. It doesn't make sense, and I think I would feel like a gambler if that was the case. So we're going to do what we can. We're going to have a trading opportunity listed out in between these 2 points in time. We're still looking at a 1 to 3, maybe. Yeah, let's squeeze in a 1 to 3 down there as well. Nice little stop loss just above liquidity there. Entry at 43.942 with a target at 43.820. So that's going to look quite decent as well. That'll be all right. So that's going to be the US 30 Dow Jones. We currently have 4 minutes to go. I'm going to have to skip the rest of the US indices. So we're going to be focusing on US 30 Dow, and we're going to be focusing on Aussie CAD, Euro USD, Aussie CAD, Euro USD, USD CAD, and gold. Okay, so I'm going to punch some numbers in lightning speed now, guys. Got to head over to my broker quickly, and then we are going to get back to it and look at gold as a market order opportunity. So please bear with. All right. Yeah. Okay. Right. So I've put the long as a pending order in gold, because the asset value is nowhere near it. What I've got is a market order open on MT5, ready to punch a hole in this one. What I don't want is I don't want the opportunity to be triggered prior to the event taking place. That's what I don't want. But I've got a pending order sort of hovering, waiting to execute it. To be honest with you guys, I think gold's going to look pretty stable actually, and there doesn't seem to be too much front running taking place, which is always a good sign. I'm going to wait to 30 seconds, then I'm going to press the button on launch and hope that it's yeah, I hope that it's all right. Yeah, we look pretty stationary. I'm launching the pending. All right, team, we've got 15 seconds. Now, remember, when the data comes out, there's going to be a slight delay with the stream. So I'll read out the data, but you'll probably have access to it before. It has also been known that TradingView is incredibly laggy when it comes to data releases, so we may have to wait just a second to get the data confirmed. Right, release has taken place. DXY is down. Could be a miss on the data here. Just looking at the initial... yeah, it looks like the data is going to be a bit of a miss. All right, so it's a bit of a mixed bag. We have a 0.1% increase on core inflation monthly data, but we have a 3.1% core inflation annual rate. There's a 0.2% increase on core inflation. Huge beat on the data there. Not in terms of the actual number, it only being 0.1% above the forecast. But this is very, very big news. And the Fed, I believe, will be watching that one like a hawk. Now, looking at that 3.1% figure. Coming down into the base inflation month over month, we've got a 0.2% increase, which was as expected. And we've actually got a stable 2.7% base annual rate from the prior figure as well, which is 2.7%. So what we can see, what is definitive in this data is that inflation is rising. That is what is definitive from this data. We have not got a reduction in anything apart from the monthly base inflation rate, which was expected. We have a 0.2% rise in core inflation, the annual one. We have a 0.1% rise in core inflation monthly, and we have a stability in base inflation annual, which means the inflation hasn't gone anywhere. It's not declining, it's actually staying there. And I would not be surprised at all if August's was rising yet again. If we looked at that 2.8, 2.9% being the rate for the being the one for that time. Now, heading over here to the DXY, really interesting stuff here, guys, happening in the DXY. Look at this bar. Okay, all take a good long look at that. Now, based on the information that we had today, this is an outlier. This is exactly what I was explaining at the beginning of the session today. This is exactly what I was talking about yesterday. The DXY declining on relatively hawkish economic data. This is quite bullish economic data. Core inflation up by 0.2%, and the dollar is selling off as a result of it. And that is because of everything else going on behind the scenes, because of the state of the macro and geopolitical theme in the United States. Now we've got this situation going on, of course, with the inflation as well, and it's not going anywhere. This isn't actually that good for the US. This is quite bad. The dollar's sold off a bit. I wouldn't say that this is necessarily an explosive move by any stretch of the imagination, but it's certainly gone down. Looking at gold at the moment, we're not in anything at all. That's completely flat. The market's barely moved a muscle at the moment, but we do have to wait to see the bleed out effect from this take place. So that's fine. Euro USD absolutely clawed it in there from that one. So that one was fine. Slippage on that did occur though. I don't know the exact figure at the moment, but I can guarantee you, looking at my return, that the slippage has certainly eaten its way through that trading opportunity. Coming down here to the USD CAD on this one, that one was a blind out winner as well. Slippage, again, looking at my modest return there, is probably taken effect. So I can calculate these for you. I need a calculator because I'm absolutely terrible at math. So just let me conclude that for you. Yeah, that one's still ongoing at the moment. Yeah, looking at that gold. I tell you what, team. I tell you what I'm going to do, actually, guys. I am going to remove the pending order from gold. All right. So just please, if you want to follow me, if you're really following the process down to a T, and you want to be managing your money like you should, then remove the gold. Don't keep it open on a hope and a prayer. Yeah. So, yeah. Just bear with now. Right. Okay, so that's 204. That's actually not too bad. That is not too bad. Or is it? I can't do the math. I can't even be bothered to use a calculator. There you go. Look. Yeah. Well, it's all right. It's okay. I wonder 1.47, probably one of the lowest risk reward trading opportunities that we've taken as of late, but that's fine. That's absolutely fine. So we got a 1 to 1.47 there. Just in terms of the net return, we did a time. Oh, get out. 0.2 times. This is crazy. What's going on with me? Times. It's the heat. The heat's frying my brain. We got an incredible return on that one. 0.294. Absolutely staggering. Let's go. So 0.294%. So that'll just be rounded down as it always is. 0.29% return on that little beauty there, which is great. Now for the USD CAD, the entry on that one was 7884. That's actually not too bad as well, to be honest. Oh, God. My God. Yes, it is. Jesus. Well. So, well, I mean, what can I say about that? I'm a professional trader, you know? This is what pros do, right? This is professional trading. Do as I say, not as I do. Got a 0.97 return on that bad boy. So yeah, let's rack it up then. So we got 0.2 times 0.94, a 0.19, 0.19, sorry, 0.19%. Oh yeah, might actually be able to afford a pint of lager and a packet of crisps after today's explosive CPI trading moves. So there we go, team. So far, we have a 0.19% gain on the USD CAD. We have a fantastic 0.29% gain on the Euro USD. We are 242 at the moment. Gold is not doing anything. I've removed the short order from there. We have a real lack of volatility actually in gold. And the US 30 Dow Jones currently doing extremely well. And I am happy to say that we are at 126 on the entry for that. So that means that we are still going to see a fantastic return. But there is a big but. That one's not actually hit its down target yet, so we can't even claim it. So that one will be the real outlier for today's trading session. We have the 1 to 2.83, which is going to be a beautiful return. That's going to be maybe 0.72, 0.73 net return, plus the 0.29 from Euro USD, plus the 0.19 from the USD CAD, and we might turn over a percent afternoon, and that would be absolutely fine. Look, at the end of the day, this is not our core strategy. This is something that we like to do as an additive, and being able to navigate the complexities of news trading and event trading like this is something to behold in and of itself. So there's no regrets. There's nothing bad about this. I'm happy with what we've done. As I said at the sort of in the middle of the session, I was pretty certain we were going to get hammered by the slippage, and make no mistake, we really, really did. But that's just part of it. So what you gonna do? Hey, what you gonna do? Yeah. So, are there any questions? Any questions at all inside the room? Anything you guys want me to have a look at whilst I'm here? Shorts on the cards for the market open. Yeah, good question, Scotty. Yeah, good question. So, God, look at that. I tell you what, guys, in hindsight, that would have been the trade to go for, wouldn't it? Margins clear right the way from the breaker structure point to the previous high. Probably wouldn't have had that one, though. We would have gone there. But that one would have been an absolute little beauty, wouldn't it? Yeah, shorts on the open. It's a really good question, bud. I'm not entirely sure this afternoon. I'm really not. It was some pretty bullish data for the US CPI this afternoon. The dollar is certainly reacting in the way that I had alluded to, which is kind of indicative to gains in the stock markets this afternoon. I think it's all about trading away from liquidity. That's what it's all about. So, okay, the US Open's going to be in approximately 50 minutes time, right? So, if the market is trading at liquidity at the US Open, then yes, I would agree. Time to short the correctives. Try and take back a lot of these big moves. We can come up to 44.32.40, short the market back down to 44.196. That would be a really nice short sort of corrective trade for the afternoon. If the market, however, does not reach points of liquidity by the US Open, then I would not feel comfortable just randomly shorting the markets. Now, I know that's not what you mean, but I also have to appreciate there's obviously there's more ears that will be listening to this stream and stuff, after the fact. And it's not about just randomly shorting the market at the US Open, sort of just because the market's had a rally. That is an easy and quick way to lose your money. So, this US30 Dow is looking really good. Yeah, this is really going for it. Let's hope it gets to that target. And then we'll get 3 out of 3 wins, which would be nice. And so, the US30 Dow, look, liquidity's up here, right? We know this. We've plotted it out ahead of time. If that's where the market's trading, like I said at the time of the US Open, then look for fresh breaker structure access points. You're going to be able to find one of them pretty damn easy, I would say. One there, for example, is quite a nice one. It's probably why we're struggling to break through this level properly now. So maybe the market comes up here, we come back down, break structure, short the market. You might even be able to take the full size trade that we took long. So that's an opportunity there in the Dow Jones. If it is a continuation long, honestly, guys, I would not even take it. I would not even bother this afternoon. In terms of the NAS 100, this one's actually broken a new all-time high. Let me just confirm that. Yes, that is an all-time high done from this afternoon's CPI event. The all-time high in the NAS 100 was there at 23.7320, and we've now got a couple of ticks above that one. It is coming down, and I would not be surprised if we take out the all-time high and then contract heavily this afternoon. So again, utilizing the previous points of inflection like we do, look for the breaker structure access points, and then trade short back down to a target profit of your sort of choosing. I would say something like this is probably quite a nice well-articulated target profit point. It's not greedy. It's going to be pretty reliable, and it's going to have a pretty high success rate. So that's the kind of trade that I'd be looking for in the corrective of the NAS 100. But again, this is not so much just fundamental corrective trading. This is actually because of where we are in the broader context as well. Trading away from those major areas of inflection. Yeah. If I'm stuck in this long by the US Open, probably trouble ahead. That's what I'd say. So if you guys all got in on that one, probably going to be trouble ahead. I would look to get out of this one right before the Open. Maybe 5 minutes before the US Open or something. You may kick yourself after for the fact the market continues spiking, but honestly, my lifetime of experience doing this, that tends not to be the case. So I would give it 5 minutes before the US Open this afternoon and probably exit the trade wherever it is. We've come up pretty bloody high, but it does seem like it's losing steam a little bit, but nothing to be worried about at this stage. I don't trade the news. So Scotty D says, I don't trade the news events, so just want to have a plan for the market open. Yeah, that's fine. Yeah, that's absolutely fine, buddy. Yeah. So that's the plan. And that would be the plan, my friend. So, any other questions? All good if not. That's absolutely fine. If you do have any questions after the stream, because I know that's the case, please feel free to drop them in the general chat, and I'll be able to get back to those questions as soon as possible for you without a problem at all. And if you're on YouTube, of course, then join the community for free, and you can use the general chat room as well. I suppose based on the fact there's no questions coming through, that is the end of the session then, team. So I hope you've really enjoyed the whole process today and how we navigate the complexities of news trading, and especially something this kind of large and extreme as the CPI. I think the market volatility this afternoon has been pretty decent. It's been a good one, definitely to demo how we do things here at the UTC. So if you are watching this on YouTube and want to get stuck in, please feel free to come and join in on a more regular basis. We do this kind of thing every single Wednesday afternoon, which is completely free and public. And if you want to pay for more, then you certainly well can. That's your choice. If not, then please have a great rest of the day. Superb. I hope you have a superb trading day this afternoon, as I do to all of you lovely people inside the community as well. I've enjoyed it, guys. Hope you have as well, and I look forward to catching you in the next one. So take care, good luck, trade safe, and I will see you then. Bye-bye.